the 10% or $200 billion goes up to 25% on March 1st. And so far, I've said don't do that. Now, if we're close to a deal where we think we can make a real deal and it's going to get done, I could see myself letting that slide for a little while.
Stocks soaring, and those comments from President Trump earlier today easing up a little on China, suggesting that the March 1st deadline for increasing tariffs may be postponed if the negotiations are going well. Stocks thought this was a good sign for trade talks, so is it?
That's exactly what investors thought today. I was at the New York Stock Exchange all day, and honestly, nobody was talking about the shutdown. They were talking about the possibility of President Trump, putting a pause on these tariff increases, and they were very excited about that, which is why many tried to get in today, because they believe he will make a comment about it on Thursday or Friday later on this week, saying that this is going to be pushed back. And if you look at other companies, Kering, the parent company of Gucci, released their earnings saying that the strength in the Chinese consumer is still there. Starbucks saying that they're going long China because they really do see some value in the market over there. So, yes, we talk about the economy, but it seems like people still believe that things can work out.
That's offset, though, by Apple saying that iPhone sales fell some 20% in the previous quarter. But I say, what's the deal look like? What does the China-U.S. deal look like? Well, it's what President Trump says it looks like. And at this point, when he's introducing wiggle room, I think that's pretty much sealed that we're going to go past this March 1st deadline with more time to negotiate. And I think that's positive for the markets.
Yeah, I think the market wants to go up here. Look, we've had great corporate earnings. Earnings came in around 19% growth. They're supposed to come in at 7.8% growth so far this quarter. That's over double what was projected because of the slowdown that was projected, which is not happening yet. We have full employment. We have wage growth. We have a lot of great things going on in this economy. I think this market wants to go up. They just want any deal. I don't think President Trump's going to get what he wants. But if you take, for example, what Tesla got in China, where they got ownership of the company, that deals a lot with intellectual property theft. China's not going to admit that they're stealing intellectual property, but you can get around that with dealing with company ownership. And I think the president may get a deal that he'd be able to sign off on. I think he's probably going to postpone it, though, March 1st. That is good for the market.
Well, I give you my – first of all, I agree with you, John, that it seems like the market wants to go up. My concern is that it's been almost straight up over, 15% now straight up since the end of 2018. But the fact is, if you like the market, you should be buying regardless of what happens to the China deal. As we've discussed on this show in the past, even if every single dollar is collected of the new taxes, the new tariffs, the amount of the effect on the combined GDPs is 0.02%. We're going to look back a year from now and not see any effect if there's a trade deal or there's not a trade deal. We're not going to solve the intellectual property area, as John alludes to. So I think my point is, whether this happens or it doesn't happen, if you're bullish on the market, buy, and if you don't like the market, stay out. But don't base what you're going to do on what happens with China.
Unless you're a short-term investor. But I think you're spot on, Gary, because I did speak to a lot of guys today. They were talking about that. You take Brexit out of the mix. You take China out of the mix. The only major concern going forward is there going to be a continued global growth, and how will that affect the United States? Another interesting point today, too, is the Bank of America Merrill Lynch published a report stating that there is so much cash on hand. And one trader told me, watch, hedge funds are going to read the headlines, get into the market. All the people with cash on the sidelines are going to take that cash because they're going to feel like they're missing out, and they're going to further add into the market. So we should see a rally in the coming weeks or months. But this is all hyperbole.
But, despite what you say about Gucci, there are a lot of companies that are noting a significant slowdown in China. And
Apple, Caterpillar.
Exactly. I would just wonder if that's going to turn around with this deal. I mean, a lot of their slowdown is not only internal stuff that they've been doing wrong, like the government taking over more private companies, but also Europe. Europe is not buying as much. We have become sort of the sole buyers. So is China going to pull out of this, even if we get a deal?
Pull out of the deal?
Pull out of the slowdown that they're in the middle of.
I think it's probably one lever, but they have internal problems of their own. I mean, they're overly leveraged to the max. I mean, 260, 280% of GDP. And yes, a lot of that is internal domestic debt. So that's the good news. But having to spend money out of it's going to be tough.